Hello and welcome back to Simple Money, the show where we look at important personal finance topics in short and fun episodes. I'm your host, Matthew Seawick, also known as the Friendly Financial Coach. So I hope that you've been enjoying this month's focus on income taxes so far. For the rest of the month, we're going to be looking at some of the most popular income tax deductions and tax credits that you or your family can use. Today, our focus is on one of the biggest income tax deductions around, the child care expense deduction. So, there's no doubt that it's tough work being a parent. You're consistently supervising a mini human and at the same time balancing a whole bunch of new expenses. This period is actually one of the most challenging financial points in a person's life. And that's why I'm here, to help relieve a little bit of the financial pressure. Many parents don't realize it, but there's a massive tax deduction that can help them cover the cost of their childcare expenses. This deduction essentially acts as a large rebate on your eligible childcare spending. So how big are we talking about? About $8,000 for all children under 7 and $5,000 for all children between 7 and 16. So to show you how powerful this deduction is, if an individual used the full $8,000, this would translate to a $2,400 tax reduction if they had a marginal tax rate of 30%. However, to receive this deduction, a handful of conditions must be met. The first being that the childcare expense must allow you or your spouse to work, run a business, attend school, or carry on grant-funded research. Eligible expenses include babysitting, nursery services, daycare, overnight camps, and more. For a two-parent household, the deduction must be claimed on the tax return for the lower income spouse. For a single-parent household, the deduction is claimed by the sole parent. This deduction is also available to qualifying same-sex and common law households. The amount that can be claimed is the lowest of the following: $8,000 for each child under 7 and $5,000 for each child between 7 and 16, or the cost of the total childcare expenses, or 2/3 of the net income of the lower earning spouse. This deduction then reduces the income of the lower earning spouse and reduces the amount of taxes that need to be paid. You can listen to our episode earlier this month about deductions if you want an extra primer on how they work. So yeah, that's it for now, but hopefully this helps reduce some of the financial pressure that affects your household. Thanks again for listening. If you have any questions, you can reach me on Twitter at ffcoach, or you can email me directly at info at ffcoach.ca. Have a great week.